Surprise might be your first reaction when you hear that Fidelity Exchange Traded Funds, or ETFs, have boasted an average annual return of over 20% for the past 10 years. Yes, you heard that right. Over 20% annually. That's a figure that's hard to ignore, especially when you consider that the average annual return of the S&P 500 over the same period has been just under 8%. Quite a difference, isn't it? So, how did Fidelity ETFs manage to outperform one of the most widely recognized market indices by such a margin? To answer that, we need to take a step back and look at how these funds have performed over the past decade. In 2014, Fidelity was a relative newcomer to the ETF marketplace. Yet their funds quickly gained recognition for their robust performance. By the end of their first year, several of their ETFs already boasted returns well above the industry average. Fast forward to 2017, just 3 years later, and Fidelity ETFs had firmly established their place on the financial stage. Their funds consistently outperformed many of their peers, and investors took notice. The company's assets under management swelled as more and more investors chose Fidelity for their ETF investments. By 2020, amidst the global pandemic, while the world economy shivered, Fidelity ETFs stood firm. Their diversified portfolios allowed them to weather the storm and continue to provide strong returns for their investors. Jump to the present year, 2024, and Fidelity ETFs continue to impress with their steady gains. Even in these uncertain times, these funds have proven their worth time and time again. Now, if you're someone who's interested in growing your wealth, these statistics should definitely catch your attention. Fidelity ETFs have consistently proven their ability to deliver strong returns over the long term. They've outpaced many of their peers and even some of the most recognized market indices. But remember, past performance is not indicative of future results. Investing involves risk, including the risk of loss. You should always do your own research or consult with a financial advisor before making any investment decisions. However, if you're looking for an investment option that has consistently delivered strong returns over the past decade, Fidelity ETFs deserve your consideration. They've shown a remarkable ability to weather economic storms and deliver solid returns. So, as you ponder your next financial move, remember the impressive track record of Fidelity ETFs. They might just be the investment opportunity you've been looking for. After all, a decade of strong performance is quite a testament to their potential. And with that, we wrap up our look at the performance of Fidelity ETFs over the past 10 years. It's been quite a journey, hasn't it? From their launch to their current success, these funds have truly proven their worth. Remember, investing is not about chasing the highest returns, but about finding opportunities that match your financial goals and risk tolerance. And who knows? Perhaps Fidelity ETFs could be a perfect match for you. Before we conclude, let's take a closer look at 4 of the most outstanding Fidelity ETFs. First, we have the Fidelity MSCI Industrials Index ETF, or FIDU, a fund that has shown remarkable resilience and steady growth. Next, we have the Fidelity MSCI Consumer Discretionary Index ETF, also known as FDIS, a fund that reflects the performance of the consumer discretionary sector. Moving on, we have the Fidelity Nasdaq Composite Index Tracking Stock ETF, or WONIQ, a fund that gives you broad exposure to the Nasdaq Composite Index. And finally, we have the Fidelity MSCI Information Technology Index ETF FTEC, a tech-focused fund that has consistently outperformed its peers. These 4 ETFs stand as a testament to Fidelity's excellence in managing exchange-traded funds. They are worth considering if you're looking to diversify your investment portfolio.